Hey traders, so it's Tuesday afternoon, 2 o'clock here in the UK, and I'm going to give you a little update. This isn't the norm, but the reason for this is because there's quite a few markets setting up, and we've taken a few trades in the Traders Club, and I just want to pump out a few ideas for you viewers out there. So just looking at the euro right now, basically some of the free analysis we sent out was we're looking for the euro to pull back into this support demand area around 1.108. Now what we've seen is if we look at the last few days candles, we saw an up range candle here but with a lower close, and then today we've now broken yesterday's low. If we drop down the time frames, what you'll see here right now is the cyclical patterns have slowed down. We've seen a break of the short-term trend line, and traders could either be short in this market already as we are, or you could be looking now for a short-term pullback somewhere into around 1.14 and then look to trade that down into this demand area around 1.108. So you'd be looking for this kind of scenario. Let me just draw it in for you quickly. So for the market to pull up into this area and then pull back down into this area, and from around 1.108 you'll be looking for some sort of rejection to see whether the market is then going to bounce and we're going to see euro strength, or we're going to continue to break through this area and use that same area to then go short again. Now that's one market that's setting up. We're going to move over to sterling. Now sterling, obviously I know a lot of you will be afraid of trading cable purely down to the news of Brexit, but for those that aren't afraid of news, technically speaking, this market has now broken its trend. We've seen a short-term break and retest of the trend line. We've now broken to new lows. 129 is the next even handle that we're going to look to see the market break through. And then if you are still going to trade just purely on technicals, and remember the only thing you can control in the market is the risk. So in terms of how much money you're going to lose on a trade, well, that's down to you. If you risk too much, well, unfortunately guys, there's no one to blame other than yourself. However, the news that will either get you to your target faster or it will get you to your stop loss faster. So just be consistent, stick to your trading rules. If you don't have any trading rules, then you really need to get a mentor or be part of a trading community where you can start to develop those rules. And if you want to know a little bit more about our trading community, hit me up on mark@tradeandtrain.com, or alternatively jump on our Telegram group, or you can book yourself a free strategy call with one of our traders. I'll put the link for all of those in the comment section below. Moving over, dollar yen is sat in an interesting place, but this obviously is mainly affected on what we call risk on and risk off. So when the markets are in risk on, that means indexes are moving, investors are prepared to risk their hard-earned capital in order to make a potential gain. Something like the yen is renowned as what we call a risk off currency. That means when markets aren't performing, i.e. investors aren't getting a return on capital, they take their money out of risk assets, stocks, equities, and move it into something that is potentially going to keep their capital safe. Not necessarily going to gain anything, but going to keep their capital safe. Traditional safe havens would be something like the yen or gold. Swiss franc to some extent, not what it used to be, obviously, with its link to the euro. But what we can see is dollar yen sitting around 109, failing to break through this area, and with gold in its sort of 1480s, that's obviously holding as well. So is this a point where we're going to start to see a move, money flow from risk assets into safe havens? We're going to see a little bit of a strengthening of those safe havens. So that's going to be gold up, silver up, and maybe yen down towards 107s again, somewhere down here. But really there's nothing on the yen right now to trade. I'd be a little bit cautious, wait for these lows to break in and around 108.40, or look for the market to close above 109s, and then you can continue trading depending what happens. Dollar CAD, this is setting up quite nicely, a pullback into 131.50, maybe even 131.90. Intraday traders can look to trade the smaller time frames, so you could go down as little as a 15 if you want. We're seeing that big impulse movement up, so I'd be looking for a pullback into somewhere around 131 and trade that back up into those highs. So just using multiple time frame analysis, you don't just have to trade from one time frame. Look at how the market's moving. We've seen that impulse, expect to pull back on a big impulse candle like that and trade it back up into structure. Moving down to Aussie. Aussie is moving really well. So we've had, if we look at Aussie on a daily chart, we've seen Aussie move right up into the key level around 6,900. We saw the market really hammer up into this level and then sell off. And we've seen the same thing again today. So we've seen the market really test this level, and then we're looking for that market to reject and come back down. So if we go down to the hourly chart, this is a free trade for you guys. We've sent this out to our traders. You can see the market's done a double top rejection here of the daily level. We're looking for the market to pull back up into that 68.60, and we'll then bring that back down into structure around 68.05. So it's just under a 2 to 1, 1.8 to 1, meaning for every £100 you put on that trade, if it hits target, it's going to make 180, or if you put $1,000 on, it'll make $1,800. So that's how the risk calculations worked on this one. Moving over to Kiwi, something very similar. If we go up to the higher time frame, up to the daily chart, you'll see how price has come straight back up into this area here. So these are all a little bit contrarian trades, i.e. not trading with the current momentum. They're contrarian because they're going to trade against it. So we're looking for this market to now pull back down. You can see this stuck on the wick highs, but you know, anywhere in that 63.50 area to this little blue zone, we're looking for price to pull back down. So again, use multiple time frame analysis, just drop back down. Look at the hourly chart. Now if you look at the hourly chart here, you'll see the trend is still moving to the upside. We haven't had a change in cyclical pattern, whereas on the Aussie, what you'd seen is the market moved up, pulled back down, moved up again, failed high, and then created a new low, and we're looking for it to pull back up before we can go short. So that's, you want to look for something similar to that. Or the other thing you can look for is maybe a short-term break in trend analysis. So something like that. You see that short-term trend line where the cyclical patterns are respecting the trend line. Look for a lower high, let the trend line break, and then take the next lower high and trade it into structure. So I've given you quite a bit of information here, guys, and you know, I've gone through it relatively quickly. If it makes sense, then fantastic. Hope you enjoyed the information and you get plenty from it. For those of you that didn't understand it but kind of want to know a little bit more, just make sure you get in contact with us and join the community. You know, we've got a really good community of traders, all with a common goal, and that's basically to try and find the best trading opportunities every day, every week, so that we can make a very handsome return over the course of the year. And you know, some of our traders have now gone full time, packed in their jobs. If that's something that you really want to do, make sure you do get in contact. Other thing is, if you do like the information that we've put out today, please hit like, share and subscribe. And that means any videos we publish will come straight to your inbox. Okay guys, have a great trading day, and we look forward to seeing you in the trading community soon.